Hey traders, welcome to Charts and Coffee. We are coming off our session in the Sector Secrets Mastery Room where we were looking to set up the hot zone of the CPI as it was coming out. And the idea was to be short for a number of reasons and not in any way to front run the report and guess at which way it's going to go, because frankly, there's no way of knowing. What this data release ultimately is one of the two most important inflation gauges, not as important as the PCE to the Federal Reserve, but certainly a really important one for us, you and me, to gauge where the Federal Reserve might be at in terms of March, May, or June rate cuts. And the tantrum that is arguably still being thrown by the broader averages tells us that clearly we're not going to get a March cut, although that has not been in the cards for almost 3 weeks now. So that's been taken out of the Fed fund futures for quite some time. The next question was, is the May meeting, the May 1 meeting, going to be when we get the cut? And it's not looking like May either, right? You can see here the May expectations, and these have been fluctuating over the last 30 minutes since the hot zone. May expectations are looking like a hold. The equity markets have to sell off based on this. And by the way, nothing front ran this. There is no market internal. There is no nothing that said, hey, we're definitely going to have a disappointing CPI. Please be aware that this is very much a reaction type thing. I'm not saying that you shouldn't be in a trade in front of CPI, PCE, and things of that nature, but it's really risky because this is very much a reaction to what did we expect, meaning what were economists, analysts, what were the whisper numbers, what was discounted in front of CPI. By the way, what was discounted was a cooler number, right? Year over year, we're flat, right? 3.4 to 3.4. Year over year, we're flat as a pancake. The problem was the discount was a half point too cool. Discounted expectations were as low as 2.9. So even though CPI is flat year over year, which you might say, Rob, that's not a big deal, but that's not how the game is played. The game is played based on what did we expect and how disappointed were we? And by the way, this is for any hot zone, right? We know earnings is the same way, right? Did earnings miss? I love when we say earnings missed. No, earnings did exactly what they were going to do. We guessed wrong, right? Economists are wrong, or the discount was wrong. And what's wrong means how we traded. The positions that we have in the market do not reflect what actually happened. So really abrupt adjustments have to be made, hence the volatility around these hot zones. Why do I call them hot zones? Because they're data events that are going to create more volatility, more chaos, if you will, than others, right? They're going to have a little bit more impact. They've got to be scheduled and they've got to be high impact, high volume. And this is no exception. So it's looking like now all bets are on June. And even June has a 21.4% expectation for a hold. So for those of you wondering, could the Fed not cut this year? Very unlikely. They know higher rates for longer create their own kind of damage. So we're in this back and forth between weighing the benefit of cutting as early as March or May versus not cutting at all. That's not a choice here. Powell made that very clear on a number of occasions, most especially on 60 Minutes. There's going to be cuts, but how many and when do they begin? That's where we as stock traders and options traders and futures traders are very, very, very prickly about it. The average person doesn't give a rip, right? They're just waiting for lending rates to come down. They're just waiting for mortgage rates to come down. And by the way, there are so many, we talked about this in top tier, there are a number of sectors that are starting to really move and groove in anticipation of this, whether that be ITB, XHB. We're going to keep an eye on TLT. It just may not be yet, right? Trading is timing, and there's no such thing as too early. Too early is wrong, right? I think there's this idea of, well, I'm there early. No, that lacks timing, and early is wrong. So these are things to keep in mind as we're dealing with this CPI. We measure this, right? There's no gut. We're measuring this. We're taking a look at the reaction, and then we move on and look for our opportunities. Does this undo the uptrend? Now, by the way, are we heading for a markets in turmoil special? Right? No, no, not at all. Take a look at this trend. It's still very much intact. Today's pulling back. We know why it's pulling back. The CPI data was flat year over year and slightly hotter, I think, month over month. It was definitely higher than what was expected. And so, yes, of course, the equity markets have to pull back based on CPI. That's it, right? Now, of course, as always, there's going to be all these folks out there who are going to tell you this is why we thought the top was in. Please, please, please. This is why I say ignore that nonsense, because they're going to have been calling tops for the last month. And then finally, like a broken clock, they might be right twice. Um, Please keep in mind this was simply a reaction to CPI. The only thing we can do as traders is wait for the volatility and use it to our advantage. And that's what we're getting now. The wonderful uptrend pullback, right? We like to call them blue light specials in the Sector Secrets Mastery Room, because what it does is it allows us to get into a position at a lower price, a pullback, a mean reversion, etc. If you want to know more about this kind of trading, why are we not pushing into longs at higher highs? We weren't, right? We've been actually very quiet towards the end of last week into this week. Why? Because we're going into data. Trades were following through. Higher highs are not a time to be building positions, but rather taking profits and managing. And so now we get to go back to work. This is the essence of buy the dip. So when everyone is freaking out because it's the end of the world, we just know it's what? There's a sale, but there's an old saying, right? And it makes me sad, but it's so true. Who's heard this saying? Wall Street is the one place that they throw a sale, right? They have a sale, and no one comes. That's so true, right? How do you take advantage of sales, right? That's a big part of what I do. We'll talk about that a lot more on Thursday. Day after tomorrow, 8 p.m., I'm going to be talking about the kind of trades we've been putting on. I'm going to share with you my trades viz, current to, well, probably Wednesday, right? Thursday, I may not have time to upload my statements before the webinar, but I'll have it current to Wednesday. What positions we have open? How are they doing? How is the account growth? Right? That's all that matters. How is the account growth? Yeah, we've hit a couple big time home runs the last couple of weeks. American Express, JP Morgan, GE, but that doesn't matter. How big were the losers? How big were the winners? And is the account growing? And I'll show you that on Thursday. If you can't attend live, no worries. Although, I do answer questions. There are great interactive sessions. But if you register, we'll send you the replay. And by the way, we're having a trial, right? This is about a $7 trial to the Sector Secrets Master Room. So I want to make that really clear right off the bat. We have some really cool goodies for you. Everything from specially curated hourly price movement range and daily price movement range indicators for folks that are going to be in the room for the trial. All sorts of cool stuff. I'll tell you more about it on Thursday. All right, so that's what we've got this morning. That's a macroeconomic look. I don't want anyone frustrated here because they're not telling the future. I never have in 30 plus years, and I'm doing all right. So don't feel the need to have to tell the future. Avoid people who are telling you what's going to happen in the future, because the one thing I can promise you this, they don't know, right? We counterpunch, we react. The market is the pitcher on the mound. We are the batter. It is our job to stand tall at the ready for the strike that we know we can make contact with. We can be discerning. And as Grandpa Buffett has told us for decades, you and I, we trade, we live in a no strikes called game. No one's going to give us any grief about standing there at the plate and not swinging everything coming by. We're not penalized for that, right? We wait for the opportunity. And this is going to be an opportunity setting up, gang. All right. So let's get to it. First up, Line Watcher. Good morning. If at market open, QQQ opens below support, what's support? What time frame, Line Watcher? And I'll be looking at the NAS, not the QQQ. So I'll be looking at the futures contract to understand what the ETF alternatives are doing. But if it opens below support, do I buy at the market open or wait for a secondary? Line Watcher, I don't know what time frame you're looking at. I don't know what support is, right, in your definition there. I will never just buy at the open. No. So I can answer that part for you, my friend. When the bell rings, am I just going to buy something? No. Am I just going to short something? No. I have to wait for a setup, my friend. So when you say wait for a secondary wave of is or is there not a setup? That is always going to be the answer, my friend. Is or is there not a setup? All right. Next up is Net. Hey there, Ben. All right. What would I do on Net? Do I have any thoughts on Net? Nope, not a one. Could care less. I mean that, Ben. I don't mean that in any deprecating way. I just mean that it gapped up. Okay. I want to find things that aren't doing that. Right. If there is an opportunity, I realize that's not super helpful, right? If there is an opportunity, Ben, what I would do if I were you is shorten the time frame maybe to an hour long and look for a setup on a 1 hour time frame, right? And not the daily. I don't want to deal with that. There's a big old hole in that chart. It's catapulted off into the stratosphere. So what I would do is I would shorten the time frame, look for structure, and kind of going back up to Line Watcher's question. What is the setup? Gang, please remember. And I think this is oftentimes lost in the very irritatingly disservice prediction type nonsense that masquerade around as analysis. It's not my job to figure out what's going to happen tomorrow. Nobody knows. We are adults here, right? Can we just stop asking people what's going to happen tomorrow? We all know that nobody knows that, right? And yet we ask and we wonder. I do too, believe me. And then I come back to my senses and say, Rag, you trust your gauges. You trust your setups. What is the sequence to the setup? And is that criteria being met? That's it, right? So as far as Net goes, where would I do that process, Ben? I'd shorten the time frame. Maybe it's going to be a day trade. Maybe it's going to be a 1 hour trade, but there's not much for me to do on that daily. All right. So I hope that makes sense. All right. Next up, and I know I've been kind of beating the drum on that process of don't expect yourself to predict, right? I don't know again, and I do know when this happened, and we know exactly when this happened. 2008, Michael Lewis, The Big Short. I can actually tell you exactly when this nonsense about picking tops, making the hero trade, and predicting what's going to happen became in vogue, and it has yet to go away. And it's the biggest disservice that's ever been done to traders and investors because now all people are doing is trying to predict. I posted something last week about, hey, let's wait for a dip to buy, which, by the way, has been working for 14 months, right? And all anyone could talk about, a couple comments were macroeconomic, this is what's going to happen. Really? Because if it does happen, if we've been taking profit and getting long and just rolling higher with the market for 14 months, does anyone here think we wouldn't have a slight cushion of profit to be able to absorb the unknowable potential black swan? That's what's being lost in what's happening today. That's what I'm going to be talking about on Thursday. I get fired up because it ticks me off that traders are constantly being frightened away from buying the dip by people who are warning them about things to come. Tell me you're long and then warn me, and you'll have an ounce of credibility, right? If all you're doing is warning me and not telling me how you've been buying in a very bullish 14 months, probably 5 quarters now, that's garbage, right? You're just looking for clicks. Be careful, gang, because that's a lot of that nonsense out there. We are not going to do that on Thursday. We're going to get very, very, very tactical about what we're doing and why on Thursday. All right. Let's see what else we have here. Now, we do have a couple long positions right now. We've had things like SMH, we've had things like GE, right? But we have very, very, very few positions on since last week, mainly because the bulk of what we did happened at the end of January, the beginning of February. We managed those open positions. We're waiting for another pullback. So you better believe this is very much another opportunity in the making. I don't mean that we're just going to buy the open and guess at the bottom. Now we get to start looking for that buy sequence again. And if you don't have a buy sequence, like Ron, I don't even know what the heck that is. What do you mean a buy sequence? What is the condition? What is the environment? What are the steps that you would take before you say, oh, that's a long setup. And that's what I want to do. And if price reaches that level, that's what I can do. All right. That's exactly what we did this morning. We set up shorts. We set up shorts this morning in front of CPI on the ES and NQ. My preference was for the NQ. Why do we set up shorts? Because that's what the criteria that was met for A, the directional bias, and B, for wanting to be short into CPI. It wasn't a guess. It wasn't a coin flip. We just wanted to focus on what the probability was. All right. That's all we can do. Probability. Yes. All right. Let's see. What else? Let me take a look at our essentials room here. 007. Yeah. Thanks for the question. I have not, I got to be frank. And we always joke. We have a member named Frank C. We always say, well, I got to be Frank C. I straight up 007. I have not been looking at it. I really haven't. It hasn't been part of my daily process. Crypto is not part of anything that I've been doing consistently. So I don't know. But, here's what I think based on what I see. If there is a trend, I'm all for it. Right? If there's a trend, I'm all for it. And that's all there is to it. There's not a trend yet. But let me show you what we could do and how we would set up some of the sequence, right? So a little tease on what we're going to be doing on Thursday. Are we above or below the 200? We're above. Do we have mostly green grab candles? Absolutely. We have some yellow neutral candles, very few red. I'm bullish. The next thing I want to do is focus on the trends. And the best trend in Bitcoin was the end of October to the middle of December. Right. So that would be the best. Then we had another window from 22 to 10, right? Another little uptrending window from there. The overall, here we go. All right. The overall movement higher in Bitcoin is very much following the daily price movement range. You see that? I just wanted to make sure I was looking at the right thing there because I haven't looked at this in a while, 007. But you see how quickly we can get up to speed? We were oversold on the 24th of January. We've been neutral since the 16th of January. And as long as we're above the 200 with mostly green and yellow candles, I don't think it's been an easy road to hoe, but it is very much, again, above that equator, above that 200, focus on the gray zone. So that's what I see. Therefore, bullishness is what I think. All right. What else do we have here? Bear with me. Let's see. Question. Lyra or Lyra, I'm sorry if I'm mispronouncing your name. I think Bot got you there on your questions in the essentials room. Cool. And let's see. Let's go take a look at what's going on with the broader averages and the bonds before we wrap up here. So let's take a look at NASDAQ. Obviously below the previous session close, heading down into the daily price movement range. S&P trading below the previous close, heading down into the daily price movement range. And then bonds have got to be reflecting higher yields because we're going to be higher for longer, right? So it's not surprising. And by the way, bonds haven't turned into an uptrend. So for those of you wondering, why aren't bonds moving to higher highs? We don't have an uptrend yet. We don't have the kind of clarity that we would want quite yet. All right. Steph OG asked, do I typically buy calls on days like this with the CPI? Again, is there a setup, right? Would I focus on the long side? Yes, Stefo, in uptrends that have a long setup, right? That's the key, gang. I'm not just going to wake up and buy calls and stuff. Which symbols, right? Building the watch list of symbols that are already in uptrends that are on sale today, right? That's number one. So which stocks have index sector stock alignment and then are pulling back? and then have a setup, right? Of course. But yes, for the most part, as a longer term overnight trader, the swings will be long, but we might day trade this morning. We'll see what happens at the bell. BLP asks, does price follow daily price movement range, or does price movement define? Price movement defines everything but volume. BLP, I can answer that for DPMRs and everything else. There is no indicator on the planet that leads price. If it needs price, it cannot lead price. There is no leading indicator out there, period. If anyone tells you leading, they're lying. There's nothing that leads price, right? And daily price movement range is no different. It needs price to show where those historical volatility ranges are. Yes, so it needs it. It's not here to lead it. It's actually there to show where the potential levels of support and resistance could be. All right. So that's a wrap, gang. Be good to each other. I'll see you tomorrow. Same time, same station.